in this world full of data and information, a curious investor actually becomes confused as much. Finance actually is simple. It's just that, people use all of these difficult jargons and just make it very complicated.
What are the kind of perspectives a female entrepreneur or a female advisor brings in a space which is different?
Don't underestimate the power of a homemaker. If we can make homes, we can make wonderful portfolios too. Finance, it's like blood, which is moving around all of us. So there is nothing without money, but never be tempted to use a market opportunity, especially equity market opportunity, for your short-term goal.
Tech or tradition, what is good for smart investing?
Tech and wisdom, I would say. Use the tech to get the data and use the wisdom to convert it into a good financial plan. So the biggest, I would say, outcome of a good wealth management, apart from fulfilling your goals, is basically have that peace in your life.
Hello and welcome to Meet Momentum Masters. Today's guest is someone who is a powerhouse of finance, someone who has close to 2 decades of experience in shaping the wealth strategies for individuals, families, family houses, and she's built a firm which is thriving since the last 18 years. She has been able to provide excellent results and wealth creation for her clients, and she's been able to do that because of her strong foundation in ethics and integrity, and her tie-ups with global research agencies, and her data-backed guidance which she's able to provide to her clients along with a strong team. So she's an entrepreneur, who is defying all odds in the field of finance. She has won multiple awards. She is doing a lot of financial literacy programs with different segments of the society, whether it is the youth who is just learning to manage her first paycheck, the women who are taking charge of her wealth, or the children who are, just tasting the finance. So let us all welcome Sonal Kotak, who is the founder of Integriti Investments. Welcome to the show, Sonal.
Thank you, Shweta. Thanks a lot. It's been an honor, and likewise, meeting a woman entrepreneur like you. And yes, so I'm all here for giving my best in terms of whatever knowledge I've acquired over the years. I'm very happy to share with all of you.
I'm also very excited to have a female momentum master on the show today. So let us begin with your journey in the world of financial advisory. Take us behind the doors of how you started your career in this field, and in a field which is traditionally very male dominated. What have been the defining moments in your career? Tell us more about that.
Well, interesting. It's almost a month of March now, and the exams of children are going on. So I would say, there were a couple of defining moments which actually helped me pivot into the right direction, I would say. So this basically started, years ago. I was always interested in helping my father with all the little banking work and all that. So I was always intrigued about the world of money right when I was a kid. And then later on, it so happened that I started developing love for numbers, and I love people. So basically, I love numbers and I love people. So, that kind of really gravitated me towards this world of finance while I was in 11th standard itself. Then came the grade 12th standard, and I had taken up science, and incidentally it so happened that I got decent marks, but decent percentage, I would say, but I very well knew even at that stage that I don't want to work with machines. I wanted to always work with people, and that's how I got pivoted into the segment of, even though I did 12th science, I got pivoted into the segment of commerce, and I took up management, and I specialized in finance. And the thing is that, I enjoyed my entire college process, college studies and all that, because management is a very overall theme. And then I majored in finance and I got a gold medal. So it was like, it was very reaffirming that yes, I am in the right direction. So yes, it was, more or less, I would say I was always listening to my own self that, yeah, I love numbers, I love people. So yes, this field is better for me. So that is how I got into finance. And then of course, banking industry, especially private banking industry in the year 2000 was actually just taking up. I mean, it was the era wherein finance, private banks especially, were looking at recruiting people and all that. And that's exactly how my journey happened. Bank was the first step, joining a bank. And then the defining moment came when I got into Citibank. So being from a small town like Baroda, I was actually able to work for a American financial organization. And I would say that, I learned everything about finance and financial management over there. And I actually never really thought of myself as a female into a male-dominated world and all that. Back then, it was only about proving myself. And Citi was quite a competitive organization. Right. So, and touch wood, I had amazing mentors within the organization. So I did pivot myself, in the right direction. Another important thing that happened was that, I realized that finance actually is simple. It's just that, people use all of these difficult jargons and just make it very complicated. True. And when you are actually interacting with, I would say with any of your clientele, if you're able to explain those financial concepts in an easy way, that's exactly the point where, you win the trust of the client. True. So simple investments, simple investment options, but if you explain them properly, then that's a first step of winning the trust of a client. So this is something that I really learned over there, and I realized that I am actually good at making things simple. So that's where, I thought that, yeah, this is exactly where, my journey has to go. So getting into Citibank was a very important, milestone, and getting a gold medal into finance was also a very important milestone, which shaped my journey. And touch wood, the journey has been very, very rewarding, personally, professionally. And I really feel that women as financial advisors, they get a lot of trust benefit. Yeah.
Sure, I would love to know more about that. What are the kind of perspectives a female entrepreneur or a female advisor brings in a space which is different, like where you don't see very many women over there, right? So what kind of perspectives or valuable inputs a female advisor is able to bring to the space?
Yeah, so, I have a very famous line that I, really tell everyone, that don't underestimate the power of a homemaker. If we can make homes, we can make wonderful portfolios too. So the important element, and I would not want to compare myself, like I'm not here trying to say that, a male is different than a female or, whatever. What I would simply want to say is that, we as women have one very important quality, okay, which is the nurturing ability. What I have been using right from day one in my career is basically using this ability, the nurturing ability, for my client portfolios, for my clients. Okay, so I actually become their sarthi, I become their friend in need. I'm always there to listen to them. And that nurturing ability, that, okay, what is it that my client really needs at this stage? Okay, he wants to fulfill his goal of educating his children. Okay, what is it that his thought process has to be? And then many a times I counsel them that, okay, if we have to reach here, if we need today a big corpus, your kid is really small right now, let's start early, let's build a corpus for him. So these are all the nurturing ability. Then there is a client of mine who is a senior citizen, for example, and he looks at the markets and he tells me that, oh, you know what, the markets are really going up, why don't we invest? And then, I will have a dialogue with him, I'll have a proper conversation with him that, sir, do we really, the markets look good today, but they will be volatile. So do you really do you want to ride this journey? Are you ready for it? It will have these jerks and all that.
These consequences.
Correct. So the thing is that the nurturing ability, gives me an edge. Also, Shweta, what I believe in is always to be able to be relevant for my set of clients. So let's say if I'm serving a mid-sized company, or if it's a corporate client, or if there are retail clients and all that, I think it's very important to always stay relevant, which basically means it can even be in terms of technology.
Yeah.
Like, upskilling in terms of technology, having that edge. It could also mean even staying relevant in terms of be very aware in terms of whatever are the corporate trends going on and how the markets are going.
True.
And all that. And then to be able to transfer that knowledge, okay, and convert it into a relevant product for the client, and explain him the risk and the return process very clearly.
Right.
So that there are no mismatches in terms of what he wants, what he expects, and what actually is the deliverable. So
Absolutely.
basically always trying to reskill and upskill ourselves, and having better and better technological tools to help us manage our client portfolios.
Right. At the same time, empowering them with the right knowledge so that, they have a
Correct.
very clear picture of what they're going to get.
Absolutely. So not hiding any information. In
Yeah.
fact, about all the disclosures, showing them very clearly what are the risks and what are the returns, benefits.
Sure.
Yeah.
I would like to know what kind of financial principles do you use when you are advising your clients?
So there are a couple of fundamental principles when it comes to advising and when it comes to recommending right financial product for the clients.
Right.
And the first and the most important is goal-based financial planning.
True.
We kind of really want to know our clients better. Okay, there is a risk profiling sheet, which it's a data gathering sheet which our clients fill up. In that data sheet, we basically try to understand what are the client goals. This finance, it's like blood, which is moving around all of us. So there is nothing without money, right?
Yeah.
All your financial goals, everything are tied to, but you will need money for everything. So we try and understand whatever are the requirements. Then we also try and understand the risk profile of the client, which is very different. Everybody will have a very, very, very different risk profile. The third most important financial principle is going to be asset allocation. And I think this is the biggest game changer.
Okay.
Because today we will need all the assets into our portfolio.
Yeah.
Okay, we will need some bit of equity investments. We would also need some bit of debt investments. Nowadays, even gold and silver are really going up.
Yeah.
So we'll even need gold and silver into the portfolio. Then, clients would always ask me that, should there be land? Should I invest into land? How about real estate? So debt, equity, real estate, gold, and international equities.
Right.
These are a couple of asset classes which every individual will need.
Right.
Or whether it's an individual or a corporate, then it will be different parameters. But how much proportion should be there in each of these asset classes, and at what points in time, and how one should actually rebalance the portfolios at different points in time.
Yeah.
So these are the three most fundamental and most important, I would say, financial parameters which are considered whenever we are designing a portfolio.
Absolutely.
The last will come in terms of what are the opportunities that the markets are presenting.
Absolutely.
Yeah, so whether the markets are up when it comes to equity markets, then are there some interesting FD options which are there currently, or are there some interesting bond options? Like there were sovereign gold options which were available 2 years back, and now it's not available. So when they are available, we have to highlight it to the clients.
Right.
Then at different points in time, interest rates will be different for each of the products. So whatever the market gives you the opportunity, you should be able to basically take it at the right time.
Yeah.
So all of these 4 important parameters are what is considered, and then we design a portfolio.
Absolutely. That's where the advisor's real sharp eye kind of comes into the picture, where you're kind of keeping a watch of what kind of product can I suggest to my clients, which can be helpful considering their risk appetite as well as their needs or goals. So you kind of have an eye on and suggest them at the right time. That's where the valuable advice kind of comes in. Would definitely want to hear if you have some challenges which you would want to show about, from your entrepreneurial journey. Would you want to share any of that with any of our audiences here?
Yeah, so the challenge I believe was always about managing home and work.
Yeah.
So it's always something that you know over a period of time learn and evolve and all that. So yeah, so that was one challenge that I always had faced, because I left my job because I wanted to be more available to my family, but at the same time numbers and people were my passion. So finance and the markets were my passion. So I really didn't want to lose out on that. And thankfully I had an amazing support system in my family and even my staff. So both the ends, I think people help people. So people and technology. So I was able to use technology very well and being able to take some work home. So thanks to laptops, I was always able to do the analysis at home and kind of be able to still deliver the same work.
Revolving your business model based on the segments which are available and the opportunities which are available for you. As an entrepreneur, you're always doing that. Great. So when you are seeing women who are, not taking too much interest in finance, whereas where there are women who are wanting to take charge of their wealth, what is the path in which you advise them to plan their journey in the world of investments?
Yeah, so if we have seen old movies and all that, एक्चुअली वो तिजोरी की चाबी हमेशा एक फीमेल के हाथ में देखी जाती थी. So that's so true. And I have referred this many times, even whenever I talk to my clients and all, that the goddess of wealth is a woman. Okay, so and there is nothing actually male or female about management of money. So many a times I have actually advised my women client to be proactive and take interest into this field of managing money. So it's as simple as that. If we can manage homes where money management is very integral part of running a household, right?
True.
So there is no reason why a female should not also step into, I would say, the other side of actually even investing money for the future goals.
Yeah.
And even for the present or for anything. I think it's an absolute, I mean it's a very good mix if the man of the house and the woman of the house actually are together deciding the future and participating. In fact, I have heard that many a times some of my male clients actually telling that it's really so good that why don't you teach my wife, why don't please ask her to do it, because I'm busy the whole day and all. And third and the most important thing, wherever, so today I have a lot of women clients, and I have I've really seen this, that wherever a woman has taken the initiative of managing the investments also, it has been a very, very, I would say prosperous household.
Wow.
Yeah, because I think the nurturing instinct, sometimes because we exactly know that, when to, really take charge and, investing and all that. So one myth that I really want to break for all the other female, and I really want to encourage them, that actually finance is simple. It is just common sense, and I have also seen many women being afraid of maths, afraid of numbers. I was very opposite. I loved numbers. So women actually are very creative. Yeah. Okay, like they would like all the other creative aspects, like tending to a garden and cooking amazing recipes and all. It's inherent. True. It's a very feminine quality. Use the same feminine quality and get into finance. It's not two opposites. Yeah. They are not bipolar. I mean, it's not two polar opposites. It's actually one and the same thing. It's just that you have to be open-minded and it is common sense. So I had a client who is very old, this female, she came across some kind of difficulty in her life and had to suddenly take charge of, and she's a yoga teacher actually, miles away from the world of money. But when the situation presented itself and she met me, and I just told her that don't worry, it is very simple. If you use your common sense, you will be able to answer a lot of questions, and for all the remaining things we are there. So I'll still tell you what is working, what is not working, what is good at this stage. And then today she comes and tells me that, you took away the fear, for me. So, yeah.
Great. Good
so
to
I
know
think
that.
the biggest advice that I want to give to all the female viewers, Don't be afraid of numbers, okay? Don't be afraid of maths, okay? It's very, very simple. It's common sense, and use your same nurturing ability to build, like, portfolios for yourself, for your family, for your parents, and yeah,
A
that's
great
it.
future for your children. That's
Great
how you
future
think.
for your children too, yes, absolutely.
So post-COVID, especially in India, we've seen a rise of, youth taking charge of their finances. The people are turning to online investments. They're taking charge. So in terms of the last decade, how do you see the difference in terms of people approaching their wealth creation versus today versus a 10-year-old? 10 year back.
Yeah, so I think you rightly said, post-COVID, today we have a lot of information which is now available online. We have, as you mentioned, the word Fin-fluencers. So I think they have also done a good job in terms of creating, not only just creating awareness, but like, making this short video content and, kind of busting some myths and at least I would say intriguing, like, creating that intrigue in terms of the youth and everyone. So one difference 10 years ago and now, we have a lot of data and a lot of information which is available online, whether it is through influencers or through whoever. 10 years back, what used to happen was that the decision making process, was actually more driven by trust.
Yeah.
Okay, and the decision making process was also more driven by, okay, whatever your CA is telling you, okay, your chartered accountant is telling you. Now the change is that, I have a very aware customer, okay, who must have, like, understood a lot of data, and he must have seen a few reels and, all that. So he's a very curious investor. He's an aware investor. But I think what he or she lacks, and that's where we come into the picture, is basically the wisdom and the action part of it. Okay. So today people see, a couple of things online and all that, but then they become so busy in their own life, that sometimes they don't take action. So that is where we come into the picture, that, we make sure we handhold our clients, either it is action or inaction, both. Okay. And also in terms of data, बहुत सारा available है, data है, information है, but to convert that data and information to useful action points and, to basically see to it that what do I do with this information? Okay. SIPs are good. Okay. Mutual fund sahi hai. SIPs are good. But then which funds to take? Okay. And which goal will this SIP help me meet? So these are the things where, your as an advisor, we come into the picture and we do. So we basically, I love this word Sarthi. And we are like Google Maps for our clients. We are their financial doctors. We are their Sarthis. We help them reach their financial goal. We are their well-wishers. Because we don't work for markets. We don't work for any particular organization. We are absolutely holistic, and we actually have to think on behalf of our clients. That okay, what does he need, or what does she need, or what does this corporate need, based on their set guidelines. So yeah, so this is where we come into the picture.
The curiosity is good. But when it comes with confusion, doesn't it lead to a headache in terms of not a good client to have as an advisor? I'm curious to know that.
Yeah, no, actually, as an advisor, it's good to have all kind of clients. And yes, what you are saying is so correct, that, in this world full of data and information, a curious investor actually becomes confused as much. So I've been meeting a lot of my online clients, and they'll have their portfolios which will have 20, 25, 30 schemes and little amount, into them. And then, they'll get confused that, what do I do with this? How do I really see to it that, I am optimizing in terms of my money? Secondly, they also feel that, okay, there are 2 schemes or 3 schemes or in the same segment, okay, all of them delivering superior returns and very good returns. Which one to pick and choose? Because what the fintech platform does is basically show you all the past data, like 1 year, 5 year, whatever. They also have their recommended list. People still get confused that, whether it is the right thing to do for me or not. Because what happens is that if you just follow that, See, अगर AI सब कुछ काम कर देता, then human brain, where does it come? It basically comes into the critical thinking part. Today, what the fintechs cannot do is basically do a critical thinking. So this is where I think we handle confused clients. We give them the right guidance. We tell them that, okay, these 5 investments are good, keep it. These another 5 you need to change. And then we align the entire portfolio.
So how do you align personal finance goals of an individual with the dynamic market trends?
Great. So yes, markets have been very volatile in the last, I would say, 6 months. Equity markets especially have, after Mr. Trump taking over in the US and some tariffs which have been levied, and so everyone, it's not just about India, it's about the entire world markets and the world market leaders, the top corporate professionals, everyone is adjusting their own sails, I would say, in terms of how the future is going to be, and how this whole world is going to shape up. And this basically means that equity markets become volatile. Now, the thing is that it's not in our hands. The volatility of the market is not in our hands. It's not a controllable factor. What is a controllable factor is when we make our own investment suggestions or decisions, and when we make our own portfolios, okay, that is in our hands. And here it is very simple. Again, like, I said that, my job is basically to make things simple for people. So, सबसे simple चीज़ यही है that, for short-term goals, okay, choose short-term investments. Okay, for long-term goals, choose long-term investments. Okay, so equity markets should be a part of your portfolio only for your long-term goals. Okay, so basically what will happen is that the short-term volatility should not impact you, because your goal is, let's say, 5 years away, and basically it is I would say it is a nature of the markets. Markets will always be volatile. That is how it is.
True.
So whenever we make a portfolio, this is our first step, that we align the short-term goal with short-term investments and long-term goal with long-term investments. To give you an example, like I have clients with all sorts of questions to me. So to give you an example, let's say that my children's education, my son's education, higher education is going to be 10 years away. Okay, let's say he's 8 years right now, and my son's education is 10 years away. And if I'm doing an SIP in an equity-based mutual fund, today the markets are volatile. Market बहुत गिर गया है आज ये वो. So there'll be a call that will come to me that क्या करना है Sonal? Do we stop this? So nothing to be done, because your goal is 10 years away. In fact, if the markets are down, you will be actually accumulating more units of the same mutual fund. So when it comes to your goal, which is long term, you continue with the SIPs. Okay. Now there was a call that came to me from another client. Okay. This client told me that I need the funds in May. आज market बहुत गिरा है, कुछ ले लें क्या? What mutual fund will you suggest right now? And I told him, I said, look, while the market is presenting an opportunity, but that opportunity is not for you. You any which ways need the funds in May. So we are better off just put the money into a fixed deposit for 3-4 months, or let us just put it into a liquid mutual fund, which is safe, which will give you safe returns. So your market volatility, actually you can use it to your advantage for your long-term goal, but never be tempted to use a market opportunity, especially equity market opportunity, for your short-term goal. So these two things, if we are very clear, then we will always have a peaceful association with money, and we will have peace in our life. So the biggest, I would say, outcome of a good wealth management, apart from fulfilling your goals, is basically have that peace in your life.
True. So you mentioned about small markets volatility, right? So given that situation, what kind of instruments do you suggest which has a balance of risk and growth? Which gives you a resilient portfolio of risk and growth?
So that's a great question, especially very relevant in today's times, because when the markets are going up, like which we actually saw equity markets giving excellent returns post-COVID, it was like a non-stop rally,
Yeah.
a substantial amount of rally which started from, let's say, later half of 2020 till, about October, November of 2024, at least about September, October of 2024. That's when people sometimes forget about the risk because the returns are so stupendous that, you kind of forget about it. You've been there, you've done that, you've seen COVID times also. But then sometimes, when you look back, see, numbers का एक बहुत बड़ा सा एक खासियत है कि and especially markets and all that, हम सिर्फ past performance देख सकते हैं. Okay, and that's why mutual funds especially run this caution that mutual funds investments are subject to market risk, please. Yeah, so it is so important. We want to keep reminding our investors that it is subject to market risk, which is subject to market risk, So sometimes when there is a constant rally, people really forget about the risk. So here again, I would say asset allocation comes into picture. So let me answer the question about specific instruments that can be used. So if you have a short-term goal, so again, short-term and long-term is compulsory to demarcate. So let's say if you are investing for any of your goals which are in the next 2 years or 3 years, if there is anything, let's say if you are saving up for your home renovation, we are saving up for going on a vacation, 2 years this year, because vacation comes up every year. You may decide to go once in 2 years or whatever. Then, there may be saving which you are doing for your child's fees. Okay. So anything or, which is going to happen in the next, couple of months to 3 years, okay, 3 to 4 years, basically you should look at short-term investments, okay, wherein your risk has to be very, very low because you don't have enough time, okay, to compound your money. And hence we usually recommend that, you can look at fixed deposits, obviously. The fixed deposits are one of the great ways. Then you can also look at some of the mutual funds which are in the debt category, which are in the safer category. Like you can also look at liquid funds, you can look at arbitrage funds. Okay, all of this give you safer returns. You can also look at some amount of money, you can look at putting it into balanced advantage funds. So these funds, these mutual funds, what they do is they mix debt and equity within the scheme. So that also we would recommend only if you have 2 years plus kind of a time horizon. Then, we can actually up the risk a little bit. So that's where, the whole thing about knowing your goals and then, aligning to it and giving you most optimal returns comes into the picture. So these are some of the instruments that can be considered for your investments, which are anywhere between 1 year up to 3 years and all that. And if you have a long-term horizon, somewhere between 5 years and above, then you can definitely look at multi-asset allocation funds. So there is a category in mutual fund which will give you exposure to debt, which is safe. Okay, then you have some bit of portion which is equity. Then there will also be commodities like gold and silver into the portfolio. And you can also sometimes, in some of the funds, you will have little bit of an international equity exposure. So, but again, this is a whole big, I would say investment is an art and science both. So there's a science part of it, but there is a lot of art part of it also. That which mutual, because, for some people, an international equity exposure is not required. Then we may suggest a multi-asset fund which does not have that category. So here again, please consult your investment advisor. Don't really take this as a blanket advice.
This is a question you put in.
Absolutely, absolutely. But I really feel that multi-asset funds, for long term, are definitely good. And then you can make like a good diversified portfolio of equity mutual funds also. Wherein you can select large cap funds, flexi cap funds, mid cap funds and all that. Obviously mid and small cap, there has been a lot of thing which, is there in the media of it being risky and, all that. But yes, again, your advisor can make a very good mix of, use this at the right time, at the right space and the right fund. But yes, when you have 5 years and above, kind of 5-7 years and above kind of a time horizon, then equity mutual funds are one of the best that you can have into the portfolio because you get a lot of time to compound the returns and you can easily able to beat inflation. You will be able to easily able to beat inflation also. So these are the two factors, then you can also build a good share portfolio. Like there are these portfolio management services which are there. You can use that and have good equity component, but make sure that you have at least 7 years plus kind of time horizon. Equity will do wonders. It will do really wonders when it comes to long-term horizon.
Great to know that. So coming to the hottest cake, the budget has been released. When it comes to individual investors, what do you foresee for them?
Yeah, so I think I was pretty happy with the budget, I would say, to an extent, because it gives more money into the hands of the investors. So into the hands of general India, I would say. And this was, I would say, right in the middle. Okay, so I mean, after 1st of April, we will see the majority of Indians having more money into their hands, because the tax deduction will be less. Because 12 lakhs, up to 12 lakhs of income you have, and after the deductions and exemptions and all that, you like up to 12 lakhs, you are like, you don't have to pay any tax. So this is a very, very good space. So I would say that what will happen is that, gradually some of the money that has remained more in the hands of the Indians, there are 2-3 directions that it will take. So if let's say you and me having more money in the hand, okay, one, we will kind of tend to consumption more. So consumption, I think, will also benefit a lot of these consumption sectors. Secondly, you would also invest more. Like, I would say that, prudent people will also tend to invest more. That, okay, let me increase my SIP. Okay. And then there'll be certain class of people which would also feel that, okay, like, my husband has a house in his name, let's buy another house. Because now I think that is also one more major change that they have done, that up to 2 houses will be called as your individual property. So even some bit of it might get translated to the real estate sector. Consumption is one thing. And the third thing which, which I as an advisor advise my clients is reduce your EMIs. Okay. I would say complete your debt faster. There is a home loan which is there. Why don't you pay up a little bit more? That will reduce your time frame and make you debt free earlier. So this is what I feel that overall it will be beneficial for the middle India, I would say.
The good times are coming.
The good times. However, the markets don't want to listen to that. They still want to continue their downward trajectory, but there are other things over there. So, but I think it is going to be positive for Indians having more money in the hands.
So according to you, post-budget, what kind of sectors do you think will see the biggest growth, or there will be some challenges in some sectors?
Yeah, so as I mentioned earlier, I think consumption is going to be a sector which will be directly positively impacted by the budget and by the tax changes that have happened. More so, even rural consumption is looking better going forward. However, consumption as a sector in terms of urban consumption, there will be some challenges. Because as I mentioned that, where that extra money in the hand of the consumer goes, either it goes in releasing the debt or like, doing more consumption, is something that over a period of time we will see. I think manufacturing looks really good to me, okay, in a long-term sense. Because if India has to retain the GDP growth rate that it is already on, and India will have to manufacture. Okay, whether it is manufacturing EV batteries or it is a semiconductor chips and anything and everything in between.
Everything make in India is definitely going to
and even the China
add
plus
value
one
to the GDP.
Absolutely. And even the China plus one policy, India
is going to benefit from that.
India is going to benefit. However, this the segment is pretty, I would say vast, and it will have its challenges. So manufacturing overall, in a long-term sense, really looks good to me. But yes, it will be filled with volatility. Thirdly, I still believe that, fintech and the IT space. See, technology is also something that we cannot, remove now from anybody's life. So again, in a long-term sense, I believe even technology space looks interesting. And some of the IT stocks have actually not done well in the past. Okay, so there can be some good value emerging there. So as the global situation improves, the direct beneficiary will be our kind of Indian companies. So overall, I think the clients should definitely look at a diversified portfolio and look at flexi cap funds and multi cap funds. But yeah, this is a broadly, I think, post budget. This is exactly how it looks like.
Do you have any other post budget tips for investors?
I think because now this the depth has widened, I would say, of 12 lakhs. People can actually look at transferring some assets in different names. For example, like we have been advising our clients that why don't you start investing in your children's name. So let's say if he's going to or she's going to become a major 2-3 years down the line, then whenever the person redeems that investments, it will fall in his or her PAN. So the PAN changes. So per PAN, PAN, basically the limit has widened. So it makes sense, to spread the investment in the
different
family.
names.
Yeah.
For an investor, there are always like two things, like they're looking at short-term gains versus long-term, reward, which they will get over the period of time. So what are some advices you have for that, balancing those two aspects and still having a financial freedom?
Interesting. So, as I mentioned earlier, that first of all, peg your long-term goal with long-term investments. So when it comes to long-term investments, I think one very important key ingredient or secret, as such there is no secret, it's a simple thing, have that patience and consistency. Okay, so when it comes to the biggest I would say tip that I can tell for building good sustainable long-term wealth is have the patience and have the consistency. And as much as possible, don't rock the boat for your short-term gains. Okay, for your short-term, I would not say gains, but short-term goals. Don't cut the tree, which is going to give you fruit in the long term. So many a times, people do get swayed. Another very important advice that I wanted to give was that, when your long-term goal has already become short-term. See, when you will need the money for your child's education when he is going to be 18. But if your child is already 16 and, you are any which ways, markets have peaked out. So that's where your advisor will come into the picture. So when the markets have peaked out and your goal is any which way is 2 years away, it makes sense to at least book 50% of the profits and move it to the short-term instrument. So you come out of the equity market. Let's say you have built a very good corpus through SIP, over a period of time. Your higher education is at 18, but your child is already 16 and the market has peaked out. Redeem investments and already keep it into the safe instruments. It can be an FD, it can be even a liquid mutual fund for that matter, or a debt mutual fund. So this is exactly where regular monitoring and regular interaction with your advisor will come into the picture. So also one of the reason why people who are doing self investments and all that, so all the past data is available, which funds you've already invested and all that, but you lack monitoring. Monitoring is also okay. You would see, just looking at the portfolio is not monitoring. Basically taking relevant decisions as per, your goals. That is exactly where monitoring comes into the picture. So because, there is regular monitoring and there is regular interaction that you will have with your advisor has to prompt you this, that, the markets are high. Yeah, we need the funds next year. Then why don't we book some profits and move into the safe funds? So this is where, you are basically trying to manage both the short term and the long term. Yeah, but otherwise there is no shortcut to building a great wealth. I would say lasting good wealth portfolio. It is just patience and discipline and trust. So.
And regular monitoring.
And regular monitoring that, yes.
So there is a myth that only, if you talk about HNIs or people who are having a lot of wealth, only those people can afford financial advisors. What's your take on that?
Yeah, sure. So this is a very relevant question. And this is a myth that is there that, only the HNIs and, everyone needs a financial advisor. एक सिंपल सी चीज़ है, there was this movie Secret Superstar, उसमें था सपना देखना तो बेसिक है. So goals, dreams is a right of everyone. So the middle class will also need a planning, and even the upper middle class and even an HNI will need planning. It's just that, the nature of the goal or the size of the goal will be different for everyone. So wealth management is not just for ultra HNIs and HNIs. Wealth management is so basic, financial planning is so basic that it is actually needed for everyone. And it is again a myth that for hiring a good wealth manager or a good wealth advisor, you really need a large portfolio or big portfolio. It is really not like that. Like, we have clients who are absolutely retail clients, okay, which will be doing certain SIPs, okay, like 20,000, 10,000, 30,000 a month. And then we have clients who are managing for whom the portfolio size will be anywhere which is more than 2 crores, 3 crores. So we manage the entire spectrum. We have specific wealth advisor associated with each of this segment. So one-on-one attention is also there.
Okay.
So your goals, your asset allocation is extremely important. It's not necessary that you really need to have a lot of money to basically start the financial planning.
Yeah.
Okay, so if you can visit our website and you can see that it's something which is easily done. And it is also a myth that there are a lot of some charges or some hidden charges associated. It's also not like that. Okay, so it's not like that, the advising is so expensive.
Yeah.
Taking an advisor is very expensive. So
Right.
It's really not like that.
Mm-hmm.
So yeah, so that is
So
something.
it's kind of very affordable, and definitely no matter what the size of investment they are looking for, if they have the right advice, they can grow,
much better.
Much better. Yeah, in a much better way. So we just discussed about the sectors where you see the opportunity. So how can entrepreneurs and corporate leaders position themselves to take advantage of these opportunities?
Yeah, so it's really interesting to see when it comes to entrepreneurs. I have seen even the second generation now taking over for a lot of my client families and all that. And I see a very interesting trend. Traditionally, the entrepreneurs will be having, let's say, a traditional business, whether it is chemicals or manufacturing or trading or whatever. But when the younger generation, it has gone abroad, studied and then come, they have a slightly different mindset. They all talk about startups. They all want to evaluate startups and all that. So this is a very interesting trend that I have seen. And I think, my advice will be that it's really good that, these people, they are taking that interest into investing into startups and all that. But my advice would also be that, be open-minded and learn along the way. Yeah. It's not just about putting money into the startup and then just seeing whether the returns have come or not and, X times the multiple and the valuations and all, but learn along the way that how this new company is building itself. And then transfer the same knowledge into the traditional side of the business. So it's a very interesting thing that, at least today's new entrepreneurs, or at least the second generation, which has come in, can actually try and do it. Secondly, even for corporate leaders, I think there has been a lot of impetus which has been given. There are a lot of these performance-linked incentives and all that. So it's all about taking the opportunity and really going ahead with it. So this is something that, it's already been happening, that the corporate leaders are taking that opportunity and all that. Though private investment has been slow, but it will soon pick up. In India, with all the ease of business related things which are now happening. Also, another interesting trend, which was there in the newspapers recently, it was marked by Mr. Kotak saying that, a lot of these young entrepreneurs, they're very happy just managing money. Okay, they want to be wealth managers, they start the family offices, and that the risk-taking appetite of theirs is, or the entrepreneurial appetite is kind of fading away and all that. So while I have also seen a bit of that, but the way now we advise is that, take part in that entire process. Even if you are doing wealth management, even if like, you're managing, the money part, the family office part, but, it is just beyond the investment. Once you've put the money, okay, fill it, shut it, forget it. It's not like that. Take a very active part whenever you are talking even to your wealth advisor, that, why these returns, what are the risks involved, what are the processes, what is the success that this particular venture has had, and all that. So the depth that you can have, you can actually use that and then use it somewhere, and somewhere it'll rekindle the risk-taking abilities, I would say.
Okay.
So yeah, so it should be a process of learning. It should never be a process of just investing and then, that's it.
Taking
so that's
a
where
backseat. Is to say,
absolutely,
kind of saying the young generation or young investors are not very proactive with the kind of way they are handling investments with the family-run businesses or with the new startups they are investing in via the family offices.
So they look at the whole thing more in terms of numbers and really, not the process that goes behind achieving those numbers. Okay, that how an entrepreneur really builds a successful company. It's a very interesting journey, the ups and downs and everything. So the more people get involved, I think the younger people also will be able to benefit out of that. And even so, that is where actually the financial literacy and financial empowerment also comes into picture. So for all our clients, we do a lot of empowering and engaging them with actually explaining them the logic behind those investments. So this is not only just true for entrepreneurs and the corporate leaders and all that, but even for regular individuals, that when you're investing into a mutual fund, please try and understand a little bit more. Large cap means what, mid cap means what, so when you understand, your confidence in the whole process will also go up. So we as advisors will always make sure that we part as much knowledge as possible. We share our platforms with them. We show them that, okay, see, this is how we do the risk analysis and return analysis. And this is how your portfolio will look like when the markets are down, how your portfolio will look like when the markets are up. All that. So my sincere advice to everyone, whether they're entrepreneurs or whether they're individual investors or corporate leaders, get involved. Learn a little bit more. It'll help you. It'll give you a lot of clarity. And whenever you invest with clarity, your investment journey will be better.
True. Yeah. So the fintech space has seen a lot of innovation, and specifically talking about the fintech innovations and the digital banking, everything has seen a fast innovation is on rapid fire in the finance space. So given that, considering your company, how does Integriti use technology or innovation to help its clients with this wealth creation process? Throw some light on that.
Sure. So indeed, fintech has been revolutionary. And India has done superbly well when it comes to adapting fintech and actually creating a difference to people. So today, whenever my NRI clients come to India, they would say that, the way you guys make UPI payments is just outstanding. So yes, and I have personally seen this whole change, after I left my corporate job, and this entire change in terms of how technology has really played an absolutely fantastic role in not only just India overall, but also in the space of wealth management. So when I started Integriti Investments, so we were using one CRISIL software. It was a software which was made by CRISIL, which we used to use for all the market related analysis. So when I stepped out of the bank and then when I started Integriti Investments, I in fact, you'll be surprised, I was maybe the only female led, I would say female led financial consultancy firm that I was establishing, and there were hardly a few people who were using technology back then, but because I had used an analytics software in the bank, I wanted to use the same, and it was horrendously expensive. But if a corporate can afford it, how an individual, but then I said that no, because I was a very early adapter of technology. So I said, no, I want to use the same software. Then we used it for 2 years, okay? And then of course we migrated to the better and more available softwares and all that. So technology has been a part of wealth management from day one. because you need data, you need technology to help you analyze your client's data. The second most important point is in terms of doing the transactions online. So we were, touchwood, we were one of the very early adapters. Way back in 2017, we went completely cloud-based. So we had our platform completely cloud-based. We had already developed a mobile app, and we had a platform through which online investments could happen. And then later on and so we developed that in 2017 basically for our NRI clients. And then in 2020, it actually came as a very big support system for us, because we could use the same for all our local clients as well.
True.
Because domestic clients, like local clients are more used to that, okay, you'll go to their house and that forms will be filled and signature, and they loved writing checks. So then we said that, okay, why don't use this as a hybrid model. That so we are already on with whoever feels physical is okay, but now I think most people like to do online transactions, at least the payments and everything. So that is how our journey has been. So wealth management today, we use various I would say technological platforms. Without that, we use various fintech platforms as well. So we have platform to first do execution of online transactions. Then we have softwares which will help us analyze our data. So whatever investments we have done of our clients, how has it fared vis-a-vis the markets? Am I doing better than the market? So if, let's say, my client has hired me, if I am doing it, then there has to be something better than what just the markets can deliver.
True.
So we kind of compare ourselves with the benchmarks and everything. So we have an analytical software. Now the same software we also use for making portfolios. We analyze. We do a lot of past data analysis and risk analysis, returns analysis, portfolio analysis. If there are any overlaps in the portfolio, a lot of it is done in detail. And then we also have basically record maintenance and kind of a software, so which is a front end software. So let's say there'll be a mobile app which will be given to my client, and there'll be a browser, and there also we use not just one, but we use two softwares because we need a backup. So that way we've been always ahead. And latest, it is in a very preliminary stage though, but we are also trying to analyze generative software, a generative AI. So AI, that's the thing that and finance is all about numbers, right? So numbers and data, you have to be completely immersed in technology. But as I mentioned earlier, that what we miss out if we get too engulfed in the data is the critical thinking part. And we don't want to miss out, and I mean that's where a human intuition and brain and everything will come into the picture. So that's where we come into the picture in terms of managing even behaviors of our clients. Sometimes that do you need this or you don't need this? Do you want to redeem or not redeem? All of that, the hand-holding part. So so it has to be a good mix of both. So that is exactly how we have till now, touch wood, we have been able to harness technology absolutely fantastically well.
Which is something really unheard of somehow, because you're talking about 2007 when you started Integriti. If you've been an early adopter, so adopting technology at that time versus where you now have understanding, a child would also understand what is a mobile app. So the times have changed a lot, and you've been very early adopter, kind of gives you an edge as well, and that is why you're able to serve more global clients irrespective of the location. So great hearing your story. Definitely the last words, if you would want to share anything or any piece of advice for the entrepreneurs who are trying to build momentum for their business growth, be it a normal everyday entrepreneur or somebody who's a female entrepreneur. Anything which you would like to share, the last sharing words.
I think it's definitely patience and perseverance, because entrepreneurial journey will always be full of ups and downs. There'll be monetary challenges, there'll be time challenges, but patience and perseverance will always get you to places. And let money chase you, don't chase money. If you have passion and if you're following your passion well, you will be good at it. You will eventually, there will be something you'll always be learning. So be a learning entrepreneur. Whether you're a male or a female, I think if we are always in the learning mode, that okay, if this is the challenge that I've come across, then how do I learn from it and go to the next? So entrepreneur journey is all about always being a learner and never really feeling that, oh, I know it all.
Yeah.
There'll be another person who will come and knock you out, that, okay, or fintech will take you, there'll be a technology change that will happen. But if you learn, you will never need to run. You will always learn from it and move on.
So it's time for some one-liner popcorn style questions. Are you ready?
Interesting. Yes.
So first would be, given that the markets are volatile, how would you balance the bold moves with smart investment planning?
Continue with your SIPs if it is a long-term goal, and book profits. If your long-term goal has become a short-term goal, then book profits. And third important point is that whenever the markets are down, invest more for your long-term goal.
Tech or tradition, what is good for smart investing?
Tech and wisdom, I would say.
Okay.
Tradition keeps changing. Traditional investments, they keep changing. Tech you cannot avoid. Use the tech to get the data and use the wisdom to convert it into a good financial plan.
One personal finance tip for entrepreneur post budget.
Very interesting. Wear a different hat when you're actually doing investments for your family. See, wear a different hat when you are, as an entrepreneur. So it has to be two different thinking, because whenever you wear a personal finance hat, it has to be relating to what your goals are and what your family goals are. So whether your children are going to study here, abroad, a lot of other things. So those two are different hats.
Right.
So please wear a separate hat and then think.
So great having you, Sonal, in the show today, and
Thanks.
great learning from the insights you have to share. I'm sure the audience also loved it a lot, the insights they learned about finance and the way you have shared about your entrepreneur journey. It was fabulous having you today. Thank you so much.
Thank you. Thank you.
I hope you liked this episode. If you liked the video, hit the like button and share it with your fellow entrepreneur friends. For more such insightful conversations with entrepreneurs and SME enablers, subscribe to this channel. Stay tuned for more content. Until then, keep the momentum going.